slowly opening. Yeah. So, Assalamu alaikum, everyone. Good morning. On behalf of the Institute, Emirates Institute for Banking and Financial Studies, we welcome all of you for the program. We are just counting. We are seeing number of participants just joining. We will just give 1 more minute for other members to join. So without further ado, we are welcoming you to the program. Today we are having, and I just like to welcome our director, Dr. Neil, to give an opening remark with regard to the program which we are having. So once again, welcome to the Challenges and Trends in Combating Financial Crimes. Over to you, Dr. Neil.
Thank you, Phoebe. On behalf of the Institute, I would like to take this opportunity to thank everybody that's actually logged on to the webinar on financial fraud and combating financial fraud. I think it's a very topical point. And before the meeting started, I referred to probably the first one I remembered was a guy by the name of Nick Leeson, and he lost 950 million pounds, which those days was the biggest fraud ever. And I think since then, we have seen massive amount of monies being lost, and I am fairly sure that going forward, we will even see more money being lost in fraud. And I think the combating of fraud is becoming more and more, and I think that the people that works in that area is probably the people that needs the qualification, the expertise from all over the banking industry and financial industry to be successful. Then I would also like to welcome our distinguished panel. I am sure that from that point of view, they are there and here, and they'll probably add a lot of value to the process, and they're all knowledgeable, far more than what I would be in this process, but I would like to welcome them, and I really hope that the session's good and everybody enjoys it. Phoebe, thank you very much.
Thank you, Dr. Neil. And next, I just want to introduce our faculty member, Divine Ignatius. Divine will be moderating the session with our fellow expert panelist. I'd like to welcome Divine. Over to you, Divine.
Thank you, Mr. Phoebe and Dr. Neil. Good morning, everyone. Let me start with introductions. My name is Divine Ignatius. I'm faculty member at EIBFS. So let me set the base for our panel discussion, challenges and trends in combating financial crimes. The landscape of financial crimes is rapidly changing. And in today's webinar, we will have 2 perspectives. One, we will share the insights on the challenges that organizations face in combating financial crime. And 2, what are the trends on emerging technologies in 2020 and beyond in managing and mitigating financial crime. We have participants from banking and insurance industry, and also from compliance and non-compliance domain. So the format of our discussions, we will keep it preferably as non-technical as possible. The participants who have joined us will have the opportunity to ask questions using the chat options. So please send in your questions, and we will try to incorporate as many questions as possible to our eminent panelists. Now, let me introduce our eminent panelist. I start with Mr. Ramnath. Yes, he's a Senior Vice President and MLRO Group Compliance First Abu Dhabi Bank. Ramnath is a CAMS Compliance Officer with over 18 years of experience, of which nearly 12 years was focused on product compliance and AML. Ramnath worked with Citigroup as the Money Laundering Reporting Officer prior to joining the FAB in May 2019. He managed AML sanctions programs, including transformation initiatives and projects related to transaction monitoring and KYC over the last 12 years. Mr. Ramnath, welcome to this webinar. I open this floor to you for your opening remarks.
Thank you so much, Divine and EIBFS for this opportunity. Good morning to everyone, and thanks for taking your time to join this webinar session. As an opening remark, I would like to say that compliance and combating financial crime is not getting any easier, and it will become even more complex going forward. Criminals are getting more sophisticated than ever before, and they are continuously improving their methods for laundering, fraud, and other activities. Financial crime is an enormous problem which comes with a huge cost. Just to give some numbers, the estimated annual cost of money laundering and crimes is close to $2 to $3 trillion on an annual basis. So the compliance cost for banks and other financial institutions, non-financial institutions, will continue to increase, as well as the threat to money laundering and terrorist financing. Hence, there is an increasing need for all of us to look for innovative ways, of course, with the help of technology, to combat this enormous challenge that we have in front of us. So thank you, and looking forward for a fruitful discussion with our fellow panelists today. Over to you, Divine.
Yeah, thank you. Let me now introduce Mr. Masood Al-Majedi. He is a law graduate from, he's an LLM and a law graduate from UAE University and Dubai Police Academy. He has more than 27 years of experience in legal compliance and AML domains. In fact, he is the most, experienced guy in the panel. Mr. Al-Majedi started his professional career in 1992 as the head of legal affairs, Ministry of Public Health. And after serving the ministry for 13 years, he moved to the banking domain with Commercial Bank of Dubai in the year 2005 and was the group chief compliance officer. Mr. Al-Majedi was nominated by the GCC Regulator Summit as the chief compliance officer and has been awarded the certificate for the most effective implemented KYC practices. Having served in CBD over 14 years, Mr. Al-Majedi joined Al Masraf Bank as the head of compliance, investment and foreign trade last year. He was also the deputy chairman of compliance committee for UAE Bank Federation. So I welcome Mr. Masood Al-Majedi and for his opening remarks. Over to you, Mike.
Thank you, Devin. First of everything, I would like to thank MLS institution to give us opportunity to share some challenges and knowledge and experience which we are doing in compliance. At the same time, I would like to welcome all the audience with us and our panelist colleagues to feel free to jump and give us some also valuable input in this quick sessions. The main challenges today that the compliance department, or not collect to the officer, but compliance department function facing in the country today, there is a lot of updated regulation come in the last 2 years, which again, compliance officer required to do a lot of follow-up, a lot of changes. Culture need to be changed in some areas. What we are doing 3-4 years back cannot be continued as is it today. The regulatory expectation, it's very high compared to previous years. They're demanding more and more from compliance officer to be involved and to make decisions, which again, one of the challenges our colleagues we're going to face in day-to-day work. On other hand, one of the points that my colleague Vivek talk about the cost of compliance and cost of non-compliance also. Actually, most of the organizations look at the compliance as a cost center. It's not revenue generate. So with the COVID issues and cost cutting, compliance is one of the victims that they need to reduce resources. They need to reduce their investment in technology, which again, a big challenge that compliance officer going to face to convince the management, convince the board that this will continue. It's very important, but again, it's a challenge that I know a compliance officer are facing in the region currently. Third point that the compliance officer, I think that it will be main challenge for it is the digital initiatives, which again affect the sometimes about the regulation, how we're going to take it further with the new challenges. Banks want to be digital. They want everything to be fast, STP, quickly to be served and done, which again, in compliance, you need to have a control, you need to review, you need to make a decisions, which again, this is one of the challenges that will be pulled front and back. Do we need to put business first or compliance first? And then we'll see what the challenges will come from that discussions. Fourth one is the quality of the compliance officer or staffs working in financial crimes. Unfortunately, a good quality is very costly and resources is very limited in the market. We have seen a lot of challenges to get a good quality expert in AML or whatever to keep him, because turnover is high, demand is high, UAE nationals are very few in this field. So this is one of the challenges also the bank's facing. I will not take more time. I will give also back to you, Devin, if you have any query or any question from colleagues, please.
Yeah, thank you. Let me introduce our third panelist, Ms. Claire Curtis. She is the Chief Executive Officer of Effecta Regulatory Consulting, and she is joining us from London today. Ms. Claire Curtis is a law graduate from King's College London. Ms. Claire started her career as a compliance officer with the US investment banking and financial services company in the UK in the year 2000. She then moved to UAE in the year 2006 and was the director for membership supervision at Dubai Mercantile Exchange, where she assisted in establishing a new commodities exchange in the DIFC in Dubai. After completing the establishment of the DME, Ms. Claire moved as the director, MENA Region CCL, a company specializing in compliance and AML for the financial services sector in the GCC. After serving 13 years with CCL Middle East, she moved back to London and joined Effecta Compliance Limited as the CEO. Effecta is a London-based compliance consulting firm assisting financial services firms to become authorized and to conduct business in line with regulatory requirements and industry best practices. Ms. Claire, we welcome you to this webinar, and I'll give you a floor for your opening remarks.
Thank you, Divine. Good morning, everybody, from a thankfully sunny UK. It's not raining, but it is quite cold over here. And thank you for the Emirates Institute for Banking and Financial Studies for this very timely seminar. I think we've had many webinars recently that people have joined regarding the pandemic and problems that people are facing. But the things that I love about this particular topic is the fact of us learning from our experiences. And I think that is the key challenges and trends that we're going to be seeing going forward. In my mind, there are at least three major topics. The one which I think we are all going to cover at some point and to some degree is technology. Working from home environment has forced people to actually really take technology seriously. For as long as I can remember, we've talked about digital onboarding, we've talked about transaction monitoring, we've talked about sanctions screening, and people have always paid at least lip service to it. But now we're really going to have to take this very seriously, especially in the environment that we find ourselves in. And with the rise of things like cybercrime, the regulators now are looking as well as what kind of innovations that they can actually get comfortable with. And we're going to have to try and keep pace with not just the innovations, but what is going to be acceptable to the regulator. I think the other thing that we need to be really focusing on as well is operational resilience. We've always in the past maybe looked at things like business continuity plans, but I think we found that most of our business continuity plans are not good enough for this kind of environment. They haven't been effective. And the regulators now are using this term operational resilience. And what does that mean to firms? What does that mean for your corporate governance structures, for your incentivization programs, and how you're actually onboarding your clients and dealing with ongoing issues such as market abuse and fraud? And then the third thing that I think is also incredibly key right now is suspicious activity reports. And when they are filed, how they are filed. We've seen the leaks from FinCEN, and that's caused a great concern to many degrees for MLROs who are put in the front line for actually submitting these confidential reports to a regulator that have now been leaked. But also now the banks are going to be in the bad light of defensive reporting, and of continuing to do business with people that they have suspicions with. So MLROs are going to have to be dealing with that because the regulators will be dealing with that. So I think those are some of the key challenges that we're seeing right now. Thank you very much, Divine. I'll pass it back to you.
Yeah, thank you, Claire. Thank you for your opening remarks. Now let me introduce our fourth panelist, Mr. Vivek Padmanabhan. He's the head of compliance and financial crime, transaction banking, Standard Chartered Bank. Mr. Vivek is a senior compliance professional with over 20 years of experience in banking and financial services regulatory compliance and financial crime compliance. He has a legal background and has completed his LLB in law and LLM in international and European law in the UK. After his initial training with Halifax Bank of Scotland, Vivek joined HSBC Bank in the UK and was with them for almost 15 years. At HSBC, he worked initially in the wealth management business in London, but the majority of his tenure was in international compliance. Vivek's experience in regulatory and financial crime compliance has been quite wide, ranging from setting up and leading the compliance function in the outsourced entities in Sri Lanka and India, to managing the regional security services compliance function in the Middle East and Africa region, and subsequently in North and South America. Vivek has been with Standard Chartered Bank since May 2017 and leads the regional transaction banking conduct financial crime compliance team in Africa and Middle East region. Vivek holds an international diploma in compliance and is a fellow member of the International Compliance Association. He is also a US certified corporate trust specialist and a member of the American Institute of Certified Bankers. We welcome Mr. Vivek Padmanabhan to this webinar, and I give this floor to you for your opening remarks.
Thanks, Divine, and welcome everybody to this webinar. It's a real pleasure to be a participant in this panel conversation, and well done to the EI BFS in terms of organizing this event. I think it's very timely, as Claire mentioned earlier. Without risking duplicating quite a lot of the really valuable comments that my fellow panelists have already communicated, just for me, a couple of additional points, right? And that is, we as a banking industry and as a risk management function, whether we work in operational risk, whether we work in compliance or financial crime compliance, we're all faced with a collective responsibility to beat the criminals and to beat their various ways of doing illegal activities. We see increasingly that the typologies of the criminals are continuing to evolve. They're getting more creative and more innovative on how they do their illegal activities. And we as an industry need to keep up with that. And time, what is proven is that we're struggling to keep up because our methodologies and modalities are pretty much set in place for existing typologies, and the dynamic, flexibility, agile way of risk management doesn't always exist in all banks. And that's a unique and acute challenge for us as an industry. I think the other piece also is that as an industry and as a risk management function, we've tended to develop a number of super specialist areas. So you have a sanctions specialist area, you have an anti-bribery and corruption specialist area, a fraud specialist area, a transaction monitoring, and various sub-functions. And it's time now for each of these sub-functions in a bank to come together for us to manage the risk in a more holistic way. And how we do that is the unique challenge that we as an industry are currently grappling with. And my last comment is just in terms of we as professionals, and I'm assuming that large numbers of the audience are by and large risk professionals. It is about us continuing to be curious. We need to be continuously critical in our activities. And then the third point is in terms of ensuring better communication within ourselves, in our own organizations, but also with the industry. And this webinar is a perfect opportunity to do the last C, which is to communicate. I'll hand it back to you, Divine.
Yeah, thank you for your opening remarks, everyone. So let me start, our discussion with straight away with a couple of questions. So my first question is Mr. Masood Al-Majidi. And the first question is that, in the rapidly changing world of financial crimes and compliance, what are the challenges of a compliance officer for 2020 and beyond? Especially in the opening remarks, you mentioned, it is, good quality compliance officer, or the challenges in getting a compliance officer. The question really is, in this rapidly changing world, what are the challenges for compliance officer for 2020 and beyond? Mr. Masood?
Yeah, thank you, Devin. As I mentioned earlier in my introduction, that the main challenges I highlighted, maybe 3 or 4. However, if we talk about the resources, a good quality people who can help combating financial crime. Today, unfortunately, we have lack of that resources because majority people are coming either with no legal background. They are coming from IT or they're coming from, what you can say, non-financial study. Like they are coming from different, from marketing or from different background, and they want to be in financial, combating financial crime. So of course, when you have people from legal background, or at least they have financial study, like they've been auditors or they've been accounting, then they can develop and learn, they can add a value. This is one of the challenges that we're going to face on the resources. On the other hand, the dynamic changes happening in regulations, the requirement is being changing, the regulatory requirement require those people to be always with the updated things, need to develop themselves and read and keep follow up. This is one of the challenges because last 2 years now the training has been changed. The methodology of training, it was a little bit online. So the knowledge and the experience or the interact has been less. Now that's why central bank came back and said, you need to promote classroom training more than online or virtual training that you go and do the test. So that's why one of the things that banks need to adopt is to implement classroom training, which is add a value and interaction more, let the audience ask questions, answer, debate, and understand more and more. Another thing that the challenges we are talking about, I think when we talk about digital, the new initiative is coming. Of course, it have negative impact and have positive impact. Positive things now today they introduce artificial intelligence, which compliance officer can use, reduce a lot of manual works, a lot of false alarms. Why? Because there is more deep dive. The alerts will be generated based on actual, really suspicious transaction, where before it was scenario-based rule, which will generate thousands of alerts. The compliance officer or AML team, they need to work with it and identify its real case or not. Today, this has been reduced. On the other hand, the challenges, and I think Claire, she mentioned about digital onboarding and non-face-to-face with the customer. This is issues. Yes, today we need to think about it. It's important to have it with this lockdown that happened in the world, that people need to adopt those changes. But again, controls, regulatory requirements should be built in. Regulatory framework should help our banks also to be in line with the requirement. When we talk about, for example, digital currency, today there is no legal framework to protect the banks. If they came to the compliance officer saying, let us do this one, he will say, what regulatory requirement is it? How we can control it? There is no legal framework organize such activity today. So this is where the debate and challenge will be there always. Unless regulator come with clear regulatory framework covering end to end, then yes, bank, financial institution can adopt it and can do the business. On the other hand, we talk about the main issue also today is about cost saving. Like what you invest in training, what you're going to invest in system, what you're going to invest in people. This has been asked compliance officer, like any other area in the business, to reduce the cost, which also affect the performance of the department. This is the main points that highlighted it.
Thank you, Mr. Masood. In fact, we have a audience question anyway directly connected with this question. So I'll put that question to Mr. Masood. The question is that, since you mentioned about training, thanks Sam Gibbings for asking this question. What he's asked is that how many companies or banks have dedicated, trainings for compliance professionals compared to, other, like for example, for sales and marketing. So when you say there's a challenge, what Sam is asking is that how many banks or organizations have, dedicated, academies for compliance professionals. So
actually, like I said to you, in the past, it was always online training. It's required by regulator to provide compliance training or AML training for all relevant staff in the organizations, which all bank adopted, and it was online, like e-learning solution. It was adopted by all banks, and it's been running even until today. It's there in all banks. But however, classroom training, specialized training, all days, yes, it was there. Then with e-learning coming to the service, it was disappear, or almost, I will not say disappear, but was minimum, not compared to the previous. But now banks started. I mean, for tell you from my experience in Al Masrah, before the lockdown in January 2020, February, we have done 4 classroom training, and we tied up with the outside vendor who was specialized in compliance, AML training, financial crime training, and they provide this training to the frontline staff. So training is required. Central bank insists on it now to have a classroom training, not just e-learning, because they know the value of classroom training is much higher than e-learning. So I hope, inshallah, it will come back. But currently the situation with the lockdown, things being stopped or postponed. But I think by 2021, inshallah, things will come up again.
Okay, thanks, Mr. Masood. Let me dive into my second question, and I would address this question to Ms. Claire. COVID-19 pandemic is, is a health situation, but it is also a financial situation with declining salaries, slowing down of business, and overall affecting the economy of the country and the region. So the question really is, what are the challenges that COVID-19 pandemic has affected in the area of financial crimes in the banking and financial industry? Claire?
Thank you, Divine. It's a great question. And as I said sort of in my opening remarks, I think this is where we need to do the look back. And it's certainly where I'm sure the regulators are going to be doing a look back and seeing how well we coped with all of these challenges. And I think the reality is that we have done okay, but we haven't done brilliantly. And in the space of things like the working from home environment, when we've done all of our things like business continuity plans and we've thought about how we're going to deal with business interruption, perhaps the one thing we didn't factor in was the inability to have human interaction. So business continuity was always about relocating your business to somewhere else and being able to access your files and your data and that sort of thing. It was never really on the basis of, that we would never be able to reach out and speak to each other or all be in the same room together and things like that. So our business continuity plans have been inadequate for this situation. So I think that a lot of the challenges has been for firms is, first of all, everybody was suddenly shut out of their offices. And then the question was, well, how good is our access to our IT system and to our platforms? Can we get the information that we need to actually monitor the transactions that are happening? So this is even before we even think about trying to open new accounts and things like that. We're looking very much at the oversight of the transactions that are happening and an oversight even of our control functions and our front office functions. Sometimes, unfortunately, out of sight can sometimes be out of mind. And as you say, I would imagine that as market conditions change, then we need to be looking at what the emphasis of the business is. Is it on getting new clients in as quickly as possible, and how we get those clients in? Because exactly as Masood was saying, we're now looking very much at things like digital onboarding. There are tools out there which, in my personal opinion, work way better than copies of passports and utility bills, which, to be quite frank, have been used for such a long time now. We have to move on from that state. And this COVID-19 situation is really forcing us as MLROs to be something that we're not generally very good at, which is creative. So we have to now start thinking, well, how are we going to be meeting these requirements and not asking, for instance, for our clients to be going and getting their documents certified in front of a notary? These things were processes that we were comfortable with. They'd been in place for a long time. Everybody understood it. The regulators were comfortable. But was it really ticking all the boxes? Well, the answer is probably not. It wasn't doing a good enough deal. And, we've already heard about the amount of estimated money that's laundered through the financial system. So this has really given us an opportunity to shake it up a bit. Utility bills, passports, they're going to be a thing of the past. We're going to have to get our heads around another way of onboarding. And in my opinion, it's going to be a better way of onboarding. I've seen a lot of the digital platforms that have come out, and certainly having come back to the UK, and I've only been here a few months, opening my own bank account and things like that has even proved challenges here. But there's much more acceptance of some of the digital platforms here for that kind of onboarding. So I think, the challenges have been a lot of oversight. The challenges have been trying to be creative, which is not in our nature, but it's very difficult to be creative and do the right thing when you've got a specific set of regulations that are sitting there that are telling you what it is that you need to do. And unfortunately, once again, as Mr. Masood was saying, we need to have real quality MLROs that can actually move away from that tick box mentality. We've spoken about it once again for years, but this is actually really pushing the issue into the limelight. And I hope that the regulators are actually going to take this opportunity to really start engaging business and engaging these digital providers to say, what can we do it better? And you know what? Better could actually be more effective. So I would certainly suggest that these are opportunities, but we need to look back and say, what is it that we've done well? What haven't we done well? I think some of the other things that we also need to think about beyond AML, cyber security. With all of this data flying around, and if we do invest in this technology, it has to be secure. So we need to be looking at cyber security as well, and beyond just the banking environment, but also looking into market abuse and fraud. Unfortunately, as we all know, when market conditions deteriorate, things like fraud and market abuse tend to increase. And certainly there's already a lot of chatter amongst the regulators about how we look at things like client assets, making sure they're secure, and looking at how people are using the market and how confidential information remains confidential in this kind of working from your own Wi-Fi and working from your front room environment. So I think there's lots of things that we're going to have to look at. I'd like to say post-pandemic, but I don't know when that is. So maybe we should start looking at it now and saying, actually, what is it that we've learned and how can we do things better? And I think there'll be some of the key areas the regulators should be focusing on.
Right. Thanks, Claire. In fact, we have an audience questions directly directed Claire. It is in line with the same thing. The question is, why the compliance and regulators always following the crime and fraud? So basically, the question what has been asked is, why compliance is reactive rather than proactive? That's the question is. So maybe Claire, you can.
I had a really interesting conversation with somebody about this once, and they made a really valid point, right? As MLROs, we come into our job every day and we consider the risks and we look at where vulnerabilities are and we look at our processes and our procedures. And then we go home and we actually have a life most of us have a life outside of the office environment. When you're a money launderer, this is your life, okay? You are constantly thinking about ways that you could get the money through the system. They are the ones that we're always going to be, to a degree, on the back foot because we're not in the same mindset. We're thinking, how can we catch someone or stop someone from using our system? they are of the opinion, we know what the regulatory environment is, because guess what? It's published. You know, we all know what the rules are, what the requirements are, and we all probably know roughly what each bank is going to request from us. So from a money laundering perspective, these guys have already got the keys, you know, and we're always going to be a little bit on the back foot. And the only thing we can really start to do is start investing in that forward thinking as to how we can start capturing that. And that is a very different mindset for MLROs. So it's going to be a challenge for all of us.
If may I add some comments here.
Sure.
I think banks or compliance officer, they never say it will be bulletproof, no money laundering will happen, no criminal activity will happen. But we try to make it hard to happen. We try as much we can to discover things, or to make it, I will not say impossible, but to make it very, very difficult to happen. For example, when we ask for KYC, source of income, when we look for getting more detail about the support documents for the transaction, this is all things will let money launderer think twice before going to this bank or going to that bank, because they know there is practice there is some requirements, support documents required. But unfortunately, the issue that's happening today, we have a weakness. Not all banks implement same procedures. Not all banks have the same standard. And this is what we have seen from regulators. They punish this bank, they punish that bank, but they didn't punish all banks. That's mean there is a weakness happening. Again, we are human beings, like Claire said. We have our life. People sometimes miss something here, something being slipped here and there. Things could happen. Money launderers, they are criminals. This is their job. They are focusing. They're trying to find where is the weakness. Sometimes they are ahead of digital initiative more than the banks. And they can, I mean, you remember when Bitcoins come, fraud happened of Bitcoins because people, they are ahead. Fraudsters, they are always thinking like we are working 6 days in a week. We have holidays. They are 24/7. They're always keeping updating and trying to find a way to go and beat the systems. So that's a challenge. We live with it. Okay. And excuse me, guys, I have some urgency in my meeting, so I will accept my apologies. Do not continue with you the panel. So thank you very much for all of you. Thank you very much.
Thanks, Masood.
Thank you. Thank you. Thank you very much.
My next question, in fact, in the opening remarks, almost every panel members touched upon digital disruption, So technically what has happened here is that the COVID-19 has actually fast-paced our process of digital disruption. And we are forced to move many financial products and services offering to online. So my question is, how good is digital KYC? Claire mentioned her in remarks as well. So how good is digital KYC? Claire mentioned passport, there's a change is going to happen in that particular. So how good is digital KYC? I would, Ramnath, would you like to take that question?
Yeah, thanks, Divine. Completely agree that, COVID-19 has fast-paced, the process, and there is a demand for a new way of thinking. Like Claire touched upon, nobody was prepared for such a disruption. Yes, we had our business continuity plans, your IT backup, etc. But nobody, we were not prepared for this sort of disruption, and it has forced us to think in a new way. So customers generally were, when this online banking and all those stuff started, they no longer go to the branches and they prefer to communicate online. It's not that because of this pandemic, I think banks and other institutions already started to think about how we can move customers from coming to the branches and move them to their phones and tabs and their PCs. So yes, COVID-19 has fast-paced this, but I think the thought process was already there. And then on a lighter note, even people don't even go to office nowadays, right? We all work from home, attend webinar. We don't have conferences in fancy hotels these days. So COVID-19 pandemic has triggered this unprecedented change. It has forced major lifestyle adjustments. and also created a lot of turbulence in the financial markets. I think the challenge of KYC compliance is continuously growing, since the way the manual KYC operates to get a lot of documents for certain type of entities and complex organizations. The time you spend in collecting all the information and you finish a KYC review, the documents gets outdated almost as soon as it gets completed, and we start the next refresh cycle. So I think digital KYC can reduce the time and also the cost of KYC by it can reduce the cost of KYC by increasing more automation, and also we can leverage a lot of decision intelligence when we bring in digital KYC. You can use a lot of machine learning and artificial intelligence tools to help you reduce those costs. I think we need to have an automated customer lifecycle management system end to end. That's what the MLROs, and not just the MLROs, but even the front end RMs and the business needs to think. At least 80% of the work has to be automated. There will always be some sort of manual work which needs to still happen, but having a digital KYC can reduce a lot of stress and increase a lot of efficiencies within the process. It can also help to have a single view of customers. Right now, with manual processes, you don't know a customer having a product in multiple locations. So digital KYC can bring in that single view of a customer. I think from an industry perspective, we are moving in that direction. I think there are various initiatives that are coming in the market with the support of course, the regulators and industry forums. Like you have your UAE Pass, which is already started. There is a blockchain initiative for KYC. There are talks about central registry, which needs to come in place, where it's easy for institutions and others to go and get those records. I think we have all the data. We have all the data in a digital format. I think it's the way we need to think creatively and ensure how we get this data and convert this into a digital KYC. I think, yes, we need to start creatively thinking and improving our systems to capture all those data. For example, if you take your large IT firms like your Google and Apple and all those institutions, where they're also in constant touch with their customers. They try to learn about their customers and know more about what their customers do. I think as banks, we also need to think in that direction and not just rely on physical documentation, face-to-face meeting. So there are various ways where we can harness all these data that is already available and help in having a good digital KYC, I would say. I think the institutions and regulators are realizing the value of this digital KYC, and it is just a matter of time. I think the steps are already being taken, and I think we will see a lot of improvement in this space over the months to come.
Thanks. In fact, I have one question from Mr. Benny Peter. Thank you, Benny, for asking this question. And it directly relates to our subject with Ramnath, and I'll point this question to Ramnath. The question is that, what Benny is asking is, in your good opinion, what is the majority, witness fraud trends, especially in UAE, especially after this, in this particular COVID situation and beyond. So he's asking, what I understand from his question is that, you had fraud trends before COVID, and then you have fraud trends in COVID and beyond. So the question is again with digital. So what I think is Benny is asking is that, do you have any data or trends if fraud trends have gone up in COVID, or if the fraud trends will go forward in the digital when we go digital? That is primarily the question.
I think yes. The answer is yes. There are new trends emerging because of COVID situation. Fraud trends, it was always there. I think with new restrictions coming in because of COVID, where people The countries restricted themselves. There was no travel. So it has also forced fraudsters to think differently. I think we are witnessing a lot of phishing attacks over emails because with technology advancement, people going online, digital, I think there are advantages, but it also creates a lot of new avenues for fraudsters to manipulate people and get what they want. They're not going to stop. It's not going to stop because of COVID or anything else. Once they find that the situation changes, they'll try to harness that opportunity and will become more creative. So yes, we are seeing a lot of phishing attacks, a lot of online attacks. So I think, I'm sure you must have seen most of your banks sending you periodic SMS and emails to be vigilant, not to share passwords to people. Generally, banks and other institutions, they don't call people for asking passwords, but still there are certain, the fraudsters try to convince these people and take those passwords, etc., and try to use that situation to their advantage. So yes, so phishing attacks, online attacks have increased over the last 6 months, and it's just that we need to be very vigilant. It's not just for the banks and the authorities to prevent this. I think the responsibility is with each individual, even with the customer as well as the banks. Yes, the banks and the institutions have the need to educate and create more awareness with their customers. At the same time, customers also need to be mindful of what are the risks in this digital world.
Thank you, Ramnath. Now, let me bring in Vivek Padmanabhan. Vivek, all the previous speakers, especially Ramnath, spoke about artificial intelligence, blockchain, and all that. So banking is literally going through a digital disruption phase, with all these new technologies. So the question really is, how have technological disruptions transformed financial crime compliance? Vivek?
Sure. Thanks, Divine, and thanks to the audience as well for the participation so far. I think some really good questions have come through, and that's really good to see. I mean, in terms of technology disruption, I think of it in terms of sort of two aspects, right? So one is how our clients' needs changing from a financial needs perspective. So that's kind of one piece, and the second piece is, what is technology doing in terms of how we as a risk management function and compliance need to operate? So when you think about what's happening in the industry and the clients themselves, you've got now the build out of different types of innovative payment mechanisms, right? So this is what is now under the banner of new payment methods. And so you've got online marketplaces. We have new types of payment service providers. We have new types of third-party payment aggregators. We also have mobile wallet providers. And then we have new types of stored value payment mechanisms. So all of this, say 5 years ago, even as early as 5 years ago, we never really saw much of. I mean, I think if you think about, say even 10, 12 years ago, you had PayPal, and I think PayPal was relatively new at that time. It still wasn't actively used, but otherwise cash was king. And you had credit cards, of course, but now, totally different types of payment mechanisms coming through. And so if you see, for example, organizations like Alipay, we've got other clients such as Airwallex, Lane Pay, a number of different types of payment mechanisms, especially China. China is really big and strong in this space. The rest of the world is still kind of catching up, but hasn't fully caught up. The other piece is around financial inclusion, right? So across multiple countries, one of the big regulatory agendas is to improve financial inclusion. And what I mean by that is many countries, and if you take, for example, Africa, the vast population in Africa, they are by and large unbanked. They are unable to have a bank account. And so because of that, what tends to happen is they're only using cash for their everyday purchases. But what's happening, especially in Africa, is this explosion of mobile wallet providers, right? And those mobile wallet providers need a banking engine to help them. And I know our bank is very, very active in that space in terms of helping the mobile wallet providers with their service arrangements, but also actually contributing to the regulatory agenda of financial inclusion, which I think is actually a really, really good thing, because the more we actually transfer the vast population of the world from an unbanked sector to a banked sector, even if it's not necessarily a conventional banked sector, we are then going to create a level of structure and transparency to the flows of money around the world. And that is one important aspect to mitigating financial crime. So gone are the days now, where a criminal will walk into, a branch in the Cayman Islands with a large suitcase with $1 million worth of cash. They don't need to do that. And even the way the industry is moving, it's all electronic and it's all digitized. So what does that mean for us as an industry? It means that we need to figure out two things. One, can we service these types of new payment methods and different types of clients? Or do we just simply shut shop and say, right, we can't service these clients? And most banks are taking the approach, yes, we can help them. We want to help them. It actually is the right thing to do to help these new types of companies. But we need to then change our way to how we assess and manage the associated financial risks. And so what that means is we need to understand who is the payment service provider, who is that third-party payment provider. Are they based in a regulated, in a recognized jurisdiction and regulated and licensed by one of the recognized regulators? What sort of compliance framework and anti-money laundering framework do they have? What sort of due diligence do they do on their clients and their counterparties? And what sort of KYC and due diligence do they do on the underlying merchants or vendors that they have arrangements with? And so we, as a banking industry, we have to think of a much more creative and insightful way on how we do due diligence on these new types of clients, because it's no longer a straightforward corporate or a relatively straightforward correspondent banking client. I think correspondent banking is also quite an evolving space and a high risk area for the banking industry. And then the other piece is around is also around understanding what are the sanction controls that are going to be in place when we take a payment instruction from a payment service provider, or if it's a bulk wire transfer coming in from an Alipay, a Lane Pay, or an Airwallex. These are the types of companies out there offering these kind of services on a worldwide basis. The other piece is that these companies are basically agnostic of borders, right? So they operate globally, and actually they want to operate globally. And in fact, in this current modern world, pre-COVID, post-COVID, it actually makes no difference. It is a globalized financial system. And so they operate across borders, and we need to figure out, okay, when money is coming in across multiple flows, who are the parties sending the money, and who is the ultimate originator, and who is the end beneficiary. So that means we need to be very smart on how we manage our payment transparency, right? So payment transparency standards, it's the FATF recommendation 16. It's a really, really important aspect. If we know the name of the originator and we know the name of the end beneficiary, and we also need to know the name of the intermediary players, that is so important because that creates transparency. Transparency means better information, better data, a better mechanism for us to then manage and mitigate financial crime. And then on the second piece, which is, okay, what can we as compliance do in terms of utilizing technology to do our jobs better? I think some of my fellow panelists have already spoken about this before. And that is right now, if you think about the everyday compliance officer in a bank or in a financial services firm, what are the tools that we currently use? And most of the tools are very traditional tools. We don't necessarily have, a smart kind of a risk management everyday kind of a tool coming in where we can log in and we have a dashboard of critical data points that are giving us some intelligence and information on how we can, what we need to prioritize and how we need to dedicate our resources on an everyday basis. Actually, what happens is we have our standard work product, a standard advisory work that we do, standard set of assurance reviews and monitoring that we do. But are we as agile in our approach? Probably not. And so this is where technology can help us, right? And I know that there are many RegTech companies out there coming up with interesting solutions on how technology can actually improve the way compliance operates. And there are quite a lot of companies, for example, who got smart ways of monitoring regulatory updates, smart ways on improving sanctions screening and reducing the false positives and using artificial intelligence to be very smart in detecting. So if today we close off an alert, the system remembers that, learns that for the next time, so it doesn't come through again. So that also creates extra efficiency for the clients and for the industry. So there are various tools out there, but I still feel a lot of what's out there is very siloed, single purpose, single particular function that it offers. And what we need is something where it's a little bit more, it's a lot more holistic, and we're looking at the totality of all of the financial crime risks that the organization faces. So I'll stop there, Divine, and happy to answer any questions.
Yeah, sure. Thanks, Vivek. Let me point out the next question, to Ms. Claire. In fact, you touched upon this point earlier. In fact, there was an audience question on this that, we discussed this point. You said that overall compliance monitoring management has to be proactive than reactive. It was an audience question. So my question is that how are compliance teams selected? What is the basis of selection of a compliance team as part of your compliance monitoring plan? Claire?
Yeah, sure. So I deal with quite a lot of companies who are set up and established or in the process of setting up. And some of the first conversations that we have, and it is very much a business conversation, is what are the risks in your business? It's not just the compliance officer's job to identify the risks within a business, whether that be banking, whether that be insurance, whether that be in trading. It's very much a process of a business pulling together and actually thinking. And many times when I've stopped and spoken to businesses and say, well, what are your risks? And they say, well, we don't have any. We've got systems and controls. We're over-regulated, of course. So, we don't really see the risks other than, financial risk. There will always be an element of financial risk or business risk in not being able to obtain the money and that sort of thing. But risk obviously is a much, much wider topic. And I think right now, firms should be looking at that risk assessment. If they haven't done one, they definitely need to do one now. And if they have done one, it's probably out of date by now, because there's been so many changes, as everybody here has been saying, the landscape has changed. So if your risks haven't changed, then that's probably not an accurate reflection of the reality of your business. So the first thing is really nubbing down what are the key risks within your business and undertaking that risk assessment. Now, that needs to look at the risks, then it looks at what is the impact if something happens, and what is the probability? And it's this bit that that people always focus on, in the fact that they say we've got all these oodles of control sitting here, so therefore the probability is pretty low. But now we've seen that some of these controls aren't working, or that there are better ones out there. So they really need to look to say, okay, what really is the probability? But looking at this sort of thing, when you're looking at monitoring of your firm, can never be done in a silo. So you look at your business, you look at what the impact is and the probability, but you've also got to take into account what is going on in your sector. What are the regulators really thinking about? And at the moment, the regulators are giving quite a lot of hints. So look around, it's not just the UAE, it's around the world, and the messages are coming out, and there are several themes that are now popping up. So these are some of the themes that compliance officers really need to be thinking about. And this goes beyond just financial crime, but most aspects of it always touch on those kind of control environments when we're talking about the use of your bank for forwarding crime. So one of the things that all the regulators are looking at the moment is your prudential. How solid a business are you at the moment, going into something that we don't know where the market conditions are taking? But as Mr. Masood said earlier, you know, there's cost cutting and those sort of things. Those conversations are being had right now. How strong is your business? Because that has a massive impact on your overarching corporate governance. Because when you've got a business that's under pressure, then the focus from the management seems to shift. When everything is going well in the world, they're all very happy to have the controls in place, even if a couple of clients say, well, do you know what, I know you're not having my left arm to prove that I'm actually who I am. But when it gets into being much more of a tighter environment, then actually there's a few things that creep in, which is like, well, you know, okay, maybe we don't know, it need his whole left hand, maybe we'll just he need one of his fingers. And that way we can start getting people actually on board. So the prudential side of things is really important when we start looking then at the corporate governance message that's coming across to your employees, and the culture that's building within your firm. You know, in a good environment, in a strong economy, culture is much easier than it is when things are getting a bit tougher. And along with that, then obviously you then need to think about your AML systems and controls. Are you just getting people on board as quickly as you can? You know, what's that message from up above? Is it, you know, the revenues are down, you know, costs are being cut, or is it still very much about, but we still want to do good business? And how do they actually communicate with their staff? What are the pressures that they're putting on the staff? And that can then in turn lead to certain things that slip through because they want to sustain a business. And there's that economic side that's always sitting there. And then also when we're looking in these kind of environments, the other thing that the regulators are really interested in is fraud. Okay, so client assets, you know, how well are client assets being looked after? So this comes from not just an internal, you know, reconciliation and independent oversight and all these good things, but, you know, we have seen examples of firms using client assets to actually prop up their own businesses. So you need to make sure that that control environment is still very strong and that client assets are still very much protected, and that becomes much more key in a more difficult environment, and for sure the regulators are already making noises about this. The other ones are things like cybersecurity and data protection. If you haven't picked up on all of the emails, as Ramnath was saying, you know, from your banks and everything else, then I don't know where you are on this planet, because I've certainly been receiving hundreds of them saying protect your passwords. There's a good reason for this. And the regulators as well are very much saying people need to be aware of cybersecurity, working from remote Wi-Fi's. You know, none of us have like fireproof safes in our houses. The potential for data slippage is increasing. And we keep looking and saying, as we have done through this whole process, that we need to embrace digital technology, and we need to get the money out there in the ether. But we've also got to be really, really conscious of what that means from a security perspective, and the ability for the cyber crime. So we were talked earlier, and you said to me, why is it that money launderers are always on the back foot? Well, because we're not always thinking creative ways to how to break down the system just to protect it. It's exactly the same when we're looking at a digital platform as well, except for the fact that we haven't really been exposed to this for such a long time. So the experience level of people to actually identify issues and the technology that's been tested and people can be comfortable with is still very much in its infancy. We're being pushed much further forward into thinking about it and embracing it, but we're still not really comfortable with it. And we also seen different payment service providers. We've seen cryptocurrencies, and we've seen a lot of the negativity that's come out from the regulators about this. And it's because regulators don't understand them either. Okay, so it's not just us. It's the regulators that also need to upskill, and they also then obviously need to then filter that down into their regulations. And you will be seeing this, because I can see it in just the general communication from the regulators, the working from home, the operational resilience, the corporate governance messages. All of these things are things that are going to be impacting your risk assessments on your business, and they should be impacting where you're focusing a lot of your monitoring time and efforts.
Right. Thanks, Claire. In fact, from the audience questions, I think we have 3-4 questions purely on suspicious transaction reporting and suspicious activity reporting. So let me put that next question straight away to Ramnath. I'll put all those questions on suspicious transaction and suspicious activity report straight to you. In fact, UAE was the first one to launch the GoAML platform in the GCC. So how has this GoAML system improved the suspicious transaction and activity reporting? That's the first question. Along with that, how is it different from the earlier system, systems of reporting and analyzing and dissemination? So how is the new GoAML system and the earlier system, if you can throw a light on that? Yeah.
Sure. I think the launch of GoAML system was a very important one for the banking community as well as the other institutions that report suspicious transactions. I think somewhere the UAE FIU in Central Bank launched the system, I think sometime in June, July 2019. So before I come on to GoAML, see, the earlier system was completely manual. It was through an online link or a portal where the reporting entities can file their suspicious transaction and the suspicious activity. There was no consistent approach. So each bank or each institution had their own methodology or their own template, their own way of writing a suspicious activity, and there was no consistent approach, to be honest. And it was very difficult for the authorities and regulatory bodies to get some meaningful information out of it. I think GoAML, the launch of GoAML has brought in a lot of structure in the way we report suspicious transactions across UAE. Yes, it was one of the first. UAE was the first country to launch it in the GCC. I think the UN also recognizes this system at a global level. Very important. It is also an advanced platform compared to the previous systems, and it connects the UAE FIU to the financial institutions as well as the DNFBPs who also report STRs. I think one of the key takeaways that we have seen recently, I'm sure a lot of MLROs and institutions must have received a specific typology report. So it helps central bank to have a view of what are the emerging typologies, what are the risks that are emerging from the suspicious transactions that are getting reported from various banks and institutions and DNFDPs and other reporting entities, and make it meaningful, and then give back to these institutions that, listen, see, these are the various typologies that we are seeing in the market, and that in turn helps us to formulate and improve our existing controls that we already have. I think it is a very important system, and I'm sure that going forward, I think there are various other initiatives within the system, like there is a peer-to-peer connection where the data can be easily reported instantaneously to GoAML, and there are XML versions of reporting which is also coming with this system. I think one side with GoAML, but the main challenge here remains in terms of the quality of reports that we submit. You can have a wonderful system, but if you're throwing junk, what goes in, what comes out. So it's very important for us as reporting institutions to have a very meaningful and quality STR submitted to the regulatory authorities via GoAML. It's very important from that aspect, and it helps the regulatory authorities and law enforcement agencies to drive the law enforcement outcomes in terms of getting to the preparator in a much more efficient way. Otherwise, if you start filing STRs which are not of great quality, then it also burdens the entire system. So it's very important for us as MLROs to make sure that the quality of STRs that we report through the system still remains at a very good level.
Right. Thanks, Ramnath. For the audience, I believe that there were 4 or 5 questions on STR and SCR. I hope those questions are answered broadly. If you have any specific questions on that, you can ask. Now I will go to my next questions to Vivek. Vivek, earlier, I would like to catch up with your earlier discussion. The earlier question, you talked about the how technological disruptions have transformed financial crime compliance. Now, I would like to really ask at this point of time, how was the regulator or the regulations help financial institutions to improve their financial crime controls? So, and what are the recent changes which is happening now with respect to the regulations? Vivek?
Sure. Yeah, no, thanks, Divine. I think there's been a lot of regulatory change, right, across globally and even within our region. But I'll just cite kind of 4 or 5 particular highlights that I think would be worthwhile in the context of this webinar. So first is just in terms of FATF, right? When we talk about financial crime, the leading global authority and the benchmark standard provider is FATF. And FATF recently, in the middle of this year, actually in June of this year, issued a very helpful paper in respect of COVID-19. And I would encourage all of the audience to look that up. It's a really useful paper which talks about the particular COVID-19 related financial crime risks that the industry is facing and the outcomes of those COVID-19 risks as well. So that's actually a useful paper for all of you to look at. The second, in terms of, and definitely that's also very helpful for us as an industry. The second, in terms of what's come out from the European Union, especially for those banks such as the bank that I work for, which is domiciled in the EU, the EU regulatory framework has actually helped us a lot. So we have the 4th and 5th money laundering directive. There is also now next year, the 6th money laundering directive will come out. And the 4th and 5th money laundering directive has actually required a number of the banks to uplift its AML framework in various ways. Specific treatment to clients domiciled in what they call 3rd high-risk countries, additional enhanced due diligence that we now need to do in terms of identifying source of funds and source of wealth, and deeper due diligence that we need to do, especially where the ultimate beneficial owners are identified political exposed persons, and the intricate detail on how we need to identify the ultimate beneficial owners. So these are all, ways where regulations have come out which are uplifting the overall standards across the industry, right? Of course, for those companies who do not necessarily have an EU nexus, you may not necessarily be obliged to follow the EU rules, but for those organizations and professionals on this webinar, if you're looking to think of ways on how to uplift your existing standards, it's a worthwhile reference point. Then if I come closer to home and I look at what's happening in our region, so in the UAE, one major and positive change happened in February of 2019 with the implementation of the new AML federal law that came out in February 2019. And that really brought the UAE's AML laws up to an international standard, and a really, really positive change. One of the key highlights for me from that regulation was the removal of the 5% ultimate beneficial ownership threshold, which for years was in the UAE and really did not take on a risk-based approach, did not make a lot of sense. And the new law has actually taken that out, and instead now it is a 25% threshold. And then of course, depending on the risk profile of your client, in certain instances, it would need to be 10%. So these are positive developments by regulators, by regulations, in order to help the industry improve its financial crime detection and mitigation programs. The other piece is here in the UAE. We know that the UAE faced the MENA-FATF mutual evaluation. It wasn't necessarily the best of outcomes that came out from the mutual evaluation. A lot of lessons have been learned. The regulators are now ramping up their own efforts. They've now established an AML supervision department and a new FIU. They're bringing in resources and international talent into the FIU in order to improve the overall responsibilities from an enforcement and a regulatory perspective. More recently, in the middle of this year, the UAE issued the Stored Value Facility consultation paper. So that's a really interesting paper, which is starting to now regulate topics such as crypto assets, which Claire mentioned earlier. Crypto asset generally is a very interesting topic. I've been quite involved in that space myself within my bank, and regulations have come out. So the EU has issued a new crypto asset regulation. And here in the UAE, I mentioned the Stored Value Facility consultation paper. I expect that will turn into an enacted regulation relatively quickly in the next few months. Bahrain last year had issued, the Central Bank of Bahrain issued a crypto asset specific regulation. Qatar has also got a circular that they issued, the QCB. In Qatar, though, the rule is very simple, which is that it's a straightforward prohibition. Whereas in Bahrain, it's not a prohibition. There are actually specific rules and checks and balances, and we can do business with crypto assets and clients who want to invest in crypto assets. There are particular rules around that. So I think overall, just in terms of summing up, if you think about, from FATF, you've got the international bodies and, coming out from the EU, and then more closer to home, the UAE, Bahrain, and Qatar are just sort of three examples where regulations are definitely helping the industry and helping us as professionals do our jobs. One thing that's always so much more easier for us as compliance professionals is when we go to our CEO or our chief risk officer and we say, we've got a regulation that the organization needs to comply with, and it's mandatory that we comply with this regulation. Please help us, and we need resources in order to ensure compliance with this regulation. That's an easier conversation to have, as opposed to saying, there is no regulation, but here's what we need to do. Years ago, that was a very, very difficult conversation. I think now the culture of the industry is shifting. We don't necessarily need a regulation to do the right thing. We know that in many instances, we are obliged to do the right thing. It's the right thing for the reputation of our industry. We know that the banks suffered after the various debacles that we've seen over the last 10 years, prior to the global financial crisis, and even immediately after the financial crisis. The banks have had overall a bad reputation. So it's in our interest to do the right thing. And I would actually argue that, yes, regulations are good to help us, but we don't need to rely just on regulations. We should actually be proactive ourselves in implementing compliance frameworks and financial crime frameworks ourselves without necessarily the need for regulations. So I'll stop there, Divine, and happy to answer any questions.
Vivek,
Sorry, Divine, if I may add, I think very, very valid points which Vivek has explained here. And I think regulations do help and push areas where, certain institutions or certain sections of the industry were not up the curve. Like, for example, the DNFBP sector was not under the ambit of in many countries. So FATF took that step in bringing out what are the vulnerabilities in those sector and forced all countries to bring them under the regulatory umbrella. So it really helps. But what is also important for us as institutions is it's just not the regulations, but the effective implementation of these regulations into your day-to-day process and procedures is also very, very critical. So it is always easy to have a very beautiful worded policy based on the regulations, but if that policy is not implemented effectively in your front line with proper controls, it's still not going to still help. So I think the dialogue between the regulator with the bank, the compliance, and in turn compliance, making sure that the engagement with your front end teams, your business, your RMs, your product teams, to ensure that the regulation and the policy into the procedure and its effective implementation is also very, very critical for in any institutions to come up the curve. Otherwise, we will always be catching up.
Okay. Thank you, Ramnath and Vivek. In fact, Vivek, I would like to follow up an audience question with what you said. In fact, thank you, Priya Anand, for asking this question. In fact, anybody can, but I would like to throw it to Vivek. Priya's asked this question. How can we look at effective compliance program? And she has referred it to the FinCEN files, and and if you want to talk about it. Is there any learnings from that? Or, she's asking that particular question. So Vivek, would like to go ahead?
Sure. I mean, so maybe I'll first talk about the FinCEN files, right? So we know that a number of banks were implicated in that story, but and for sure, it is a very, very serious matter that all of us as an industry, need to deal with. The fact is that over the last so many years, criminals have gotten away with it. There's been a lot of illegal proceeds that have gone through the banks, and across the board, the banks have struggled in order to catch these criminals and to totally stop that kind of illegal activity. Having said that, if you see what happened out of the FinCEN files, actually all of the banks did the right thing. We detected the suspicious activity. We filed the suspicious activity reports with the law enforcement authorities and with the FIUs, and we did the right thing, right? And in most instances, subsequent to filing the suspicious activity report, where appropriate, we even would close the account and terminate the relationship with those suspicious individuals. So the banks did the right thing in terms of our responsibilities. And we should just correctly contextualize this. I think the media storm on this doesn't fully provide that full context. And the story and the strapline is an exciting and storyline in terms of this is what the banks have done. But we all need to remember that actually the banks did the right thing in identifying the suspicious activity and filing the correct reports with the law enforcement authorities. And we all of the banks implicated have taken huge steps to improve our financial crime programs and the amount of resources that have been put into place. So I'll just give some broad statistics. The previous organization that I worked for before Standard Chartered Bank, HSBC, prior to 2012, roughly globally, there were around 4,000 staff in the world of compliance and financial crime compliance. And within a short space of 2 to 3 years, that headcount doubled to 8,000. So that's the kind of investment that the banks have put into compliance and financial crime compliance, because we take this so seriously. In terms of that first question, how do we make our programs effective? It is a constant evolution, right? So, and I think Ramnath made a very good point much earlier in terms of implementing a financial crime program, which is thinking about the client life cycle. Who is our client? We bring them on board. What activity do they do? What is their product exposure? Who are the counterparties that they're involved with? Understanding their business properly, and then eventually, what sort of flows are they doing through to us, to a point where maybe they might get exited, or maybe they stay with us, or maybe their business evolves. And that's what we need to do. Do we do that effectively now? Probably not. And this is where we need technology to help us. We also need to improve certain specific functions like transaction monitoring. At the moment, transaction monitoring is generally a rule-based mechanism. Is it effective? Probably not sufficiently effective. Is it better than it used to be 10 years ago? For sure it is. But is it smart and intuitive and intelligent? It isn't. And that's where we're relying on technology and the RegTech companies out there to really give to the industry some really smart solutions. Second would be in terms of sanction screening and sanctions monitoring. What do we have right now? We have a watch list. We have a lot of names connected into that watch list. We do name screening. We do transaction screening. A lot of hits come out. And from those hits, we need to investigate those hits. We need to go back to our clients with large numbers of requests for information. And it's a very cumbersome process. Is there a way that we can reduce the number of hits by being much more intelligent with the way name screening is done and transaction screening is done? For sure. Are we doing that as well as we could do? Probably not. And this is where the industry is continuously trying to look for solutions. And the bank that I work for has implemented an artificial intelligence machine learning technology just in terms of sanction screening, and that's helped a lot, but there's more to be done. And there are other ways in terms of effective compliance, right? So, Claire talked earlier about monitoring, compliance monitoring. See, there used to be a time when at the beginning of the year, you do a compliance risk assessment, you complete the risk assessment. Off the back of that, you then identify what are your top risks, and out of that, what kind of reviews and monitoring you need to do. And you have an annual compliance plan of the different types of reviews that you need to cover. And actually, maybe we just need to turn that whole thing on its head. Instead, we need to be a lot more agile. So literally in a given quarter or in a given month, we look at specific data points. We need to define those data points and then say, okay, based on these particular red flags or these particular risk indicators, we're now going to do some bespoke monitoring and reviews and be a lot more agile with the way that's done. Right now, is that what the industry is doing? Probably not. And the reason we're not doing it is because our synthesis of the data is just not timely enough. And we don't have the right tools to get all that data computed in a way that helps a compliance officer or a compliance head to decide how best to utilize its resources. So there are lots of things the industry has done and the function has done to improve compliance effectiveness, but there's a lot more to go in what we can achieve.
Right. Thanks for. Yes, Ramnath.
Divine, if I may add, I think I would just add on this, specifically on the spins and leaks, and Vivek rightly pointed out that it is very important that we contextualize this in a right manner. Again, one of the learning is that it is very important for the institutions to protect the confidentiality of the suspicious activity reports. I think that's the big learning for all of us. These unauthorized, sometimes we are at the mercy of the media, but these unauthorized disclosure of SARS is a crime. It has the potential to impact the national security of any country. It can compromise law enforcement agencies' investigations. It can also threaten the safety and security of the institutions as well as the individuals who report these suspicious transactions to the regulators. So it can bring significant reputational damage to banks, regulators, investigators, etc. So it's really important that people understand that it's just not a media hype. There are various learning for us as institutions and professionals in financial crime to protect the confidentiality of these suspicious activity reports that we file. Sorry,
yeah, thanks, Ramnath. In fact, we are just about time, so I will take my last comments from Claire. If you'd like to share a global perspective, yeah.
I think, to be honest, we're all in the same boat. There's a I think the point is exactly as both of all my colleagues have been saying. This is a worldwide issue. Things like central repositories, digital learning, artificial intelligence, they're things that we're grappling with on a worldwide basis. So I guess the message is, don't think that you're alone. Every regulator, every MLRO is dealing with very, very similar issues. And the key really is keeping your eye out on regulatory messages that are coming through, not just from your local regulator, but from a worldwide basis, because it all interlinks. So we need to be looking at this much more on a global basis than just on either a single firm or even a single country.
Okay, thanks, Claire. Unfortunately, we have, we'll stick to our time, so we have come to the end of our discussion. Anyway, thanks, Vivek, thanks, Claire and Ramnath, for being very actively engaged and taking all those audience questions. And for the audience, I know all the questions are not answered. We had a lot many questions, so I tried to put all those questions together. If any of those questions are unanswered, we'll take those questions and we'll post it to our panelists and then try to get a reply from them. So we'll try and get some reply for your questions and your participations. So I would thank all of you for effectively participating in our webinar and making it a success. Thank you so much. Phoebe, over to you.
Thank you, Divine. Thank you for the great session moderation. I hope you did a wonderful job bringing the balance. And I want to thank all the participants, first of all, for joining for the session today. And each one of you, like Ramnath, Vivek, Claire, taking time for the last couple of days to organize this event. And I know this is a very, very interesting topic, and we are having plenty of questions. In the Q&A, some we were able to answer, as Divine mentioned. And hopefully we will try to reconnect with the topic again, probably in 2021, let us say, probably in Q2. And I request all the participants, please follow the EIBFS LinkedIn platform or YouTube, so that, and reach out to us for any topic which you like to see in our webinars moving forward. So Dr. Neil, I just want you to have a closing remark with the webinar.
Thanks, Phoebe. All I want to say, I think everybody covered everything. I think it was very informative, and I think it will be a very good initiative if we can have a follow-up on this. And thank you for everybody that's been listening to this, and thank you very much for the panel. It was very informative. Thank you very much.
So everyone, stay safe, take care, and good day. And panelists, we will connect by email. Thanks again for taking the time for EIBFS. Thank you, Divine.
Thank you.
Thank you. Thank you. Bye-bye.
Bye.